So here we go. This is the payroll one. This one's not too hard. We just got to pay close attention. So I'm going to try to be as concise as I can and as clear as I can as we go along. Let's see. Logan White is a general manager of Value Point Saloons. And Spencer, by the way, this one, the bonus is just linear. It's not where we back into the bonus. Yeah, so maybe that made it confusing, because with this one, they just make you compute the bonus straightforward that way. During 2014, White worked for the company all year at $12,200 per month. Okay, so what they want us to do is they want us to figure out White's gross pay. So White's going to have a salary, and that's the $12,200 per month. So if you're good with your multiplication in your head, you could probably figure it out. I'm going to use the calculator. 12,200 times 12 months in a year. So the base salary is $146,400. Okay. He also earned a year-end bonus equal to 5% of his annual salary. So all we have to do is take that 146,400 and multiply it by 0.05, which is the equivalent of 5%, and we get 7,320. I'm going to call that the bonus. Right? So notice that the bonus is part of the gross pay. You got to pay tax on your bonus. It's not like you can get a bonus and not pay tax on it. Okay, so 146,400 plus 7,200. Okay. So the total gross pay is 153,720. For me, you have different numbers, I believe. Okay. Now they want us to compute the net pay. So companies have deductions, and what those deductions are is they withhold taxes. So the employee owes taxes to different government, federal and state. And then they also have other withholdings, right? They can have insurance. They could have charity. In this case, it's a charity. They could even have a child support is a common one, right? The state requires the employer to withhold money from the employee's paycheck for child support. So if you ever employ people and there's people who you employ that are supposed to be paying child support, you probably get a notification from the state of Hawaii saying make sure you withhold this child support on so-and-so, and then what you have to do is you have to send that money onto the child support office. Okay, so we'll start with gross pay. Gross pay 153,720, and then we're going to go down the list of deductions. So it says White's federal income tax withheld during 2014 was $1,098 per month. So this is $1,098. Remember, we're computing it on an annual basis, so I'll multiply that by 12. 1,098 by 12 is 13,176. This is going to be federal income tax withheld. Okay. Now we made a mistake because there's an additional amount of federal income tax, 1,464, related to the bonus. So I'm going to add that to the 13,176. So we'll just go ahead and add 1,464 to that, and that'll be the correct number, 14,640. Doesn't want to go in there. Doesn't let you do that. Huh? How do you get it out of there? Let's see. Have to. Okay. State income tax withheld came to 90 per month plus 30 on the bonus. So we're going to go 90 times 12 equals, and then we're going to add the 30. Okay. So 1,110. That's state income tax. State income tax withheld. Okay. FICA tax was withheld on the annual earnings. White authorized the following payroll deductions. Okay, so FICA, there's some rules that go with it. And they should give us the information over here in this I, in the information table. It says for FICA, okay, on the employee side, the first 110,100 is taxed at 4.2% for OASDI. So let's compute that one first. We'll go employee OASDI. Since this individual White made more than 110,100, he made 153,720. We're only going to tax him at 4.2% of 110,100. Okay, so we'll go 110,100 times 0.042. Okay, and I don't know what is it, round to the nearest dollar. So we'll go 4,624. Now the Medicare portion, you pay Medicare tax on your whole gross pay, on everything. So Medicare will be 1.45%, so 0.0145 times all of his earnings, 153,720. Okay, so that rounds to 2,229. So we took care of the FICA stuff for the employee. And then we had the following payroll deductions. He has a life insurance contribution of 3% of his total earnings. I'm sorry, charity fund. He's giving 3% of his money to charity. So I'll go 0.03 times 153,720. So that rounds to 4,612. Okay? And then he has a life insurance premium or a life insurance payment. Let's see, life insurance of $25 per month. Okay. 25 per month. So that, what would that be? 300? Let's see. 12 times 300. Okay. So you have all the deductions set up. We're going to make a subtotal. So we'll add up all of these deductions. I'm just tallying them up over here. So 27,515, and if we subtract that from the gross pay, that's the net take-home pay. That's what Logan White took home. $126,205. And assuming our math is right, oh, you know what we forgot to do? Forgot to label it here. See right here? I left that out. So be careful. Total withholdings. There we go. You guys got that so far? Yeah. This one's not too bad. Now we're going to do the company's payroll expense for White. So it's actually what the company has to pay. So there's the gross pay, and there'll be employer taxes. So the employer is going to pay FICA too. They're going to have the FICA OASDI and the FICA Medicare. They're also going to have unemployment tax. So they're going to have federal unemployment tax and state unemployment tax. And they give us the rules over here. It's so for the employer has to pay 6.2% in this scenario. So 0.062 times 110,100. So this comes out to 6,826.2. That rounds to 6,826. And then again, Medicare is on the whole amount, and we already computed that over here. So we're going to use that same number, 2229. Okay. Now let's see. Let's read the rules of FUTA, which is federal unemployment tax. They pay 0.6% on the first 7,000. Well, he made way more than 7,000, so we'll just take 7,000 times 0.006, because it's 0.6%. So it's 1/10 of a percent. We've got to take that decimal 2 spaces to the left. So that's 42 for FUTA. And then SUTA is 5.6%, state unemployment tax. So 0.056 times the first 7,000. 392. All right. Now let's see what kind of benefits were paid. They paid white. They put on a payment of $110 per month for health insurance. And then they put $5,200 into his retirement plan for him. That was nice. So retirement. Okay. So it looks like we just have to add. Don't forget to pull the gross pay down. So 153,720. Right. The reason we use the gross pay is that's what we're actually paying him. Okay. Even though his take-home check is less than that, we're paying him the gross pay, and then we're doing the service of taking that gross pay that we paid him, some of it, and passing it on to both the taxing authorities and the other vendors that he's buying, or the other places that he's sending his money. So like to the charity and then the life insurance that he's buying. We're doing the courtesy for the employee of making those payments for him. Okay. So he is getting paid $153,720, but he's also having to pay himself taxes, and then he's having to pay for the charity and the life insurance. So that's why when we look at we're looking at the employer's expense. The employer's expense is $153,720 plus employer payroll taxes. So we got to tally these up. So on top of the $153,720, we're paying employer payroll taxes of $9,489, and then we're paying some benefits. Okay, $6,520 in benefits. Okay, so if you add them all up, that's the total expense. Total payroll expense in this case for Logan White. Okay, for Value Point, right? Value Point's total payroll expense relating to Logan White. Okay, that's what it costs to have Logan work for Value Point. Okay. Then we make the journal entry. They're only really asking for the paycheck entry. They're not asking for the taxes and the benefits, which would be separate entities. So entries. So we're going to take this information right here and turn that into a journal entry. Okay, so we got federal, state, OASDI, Medicare, charity, and life insurance. And then we got the gross pay. Okay. So we'll just lay it out. I think they want the bonus separately, okay? So we're going to go salaries expense, bonus expense, and we'll get that information up here. 146,400 and 73.20. Okay, that came from the gross pay table. And then we're going to have the withholdings. So those are going to be liabilities. We'll take all of these withholdings, federal, state, OSDI, Medicare, charity, and life insurance. So federal, state, OA, SDI, Medicare, I think it was charity, and life insurance. Okay, so if you took all of this and you make the rest of them credits, the difference is going to be the amount that we pay out in cash. So we can take those numbers, 14,640. One state, 4624, 2229, 4612, and finally 300 of life insurance. So if we do the math right, it's going to be the same, right? It's going to be this total here minus all of this. The net pay is 126,205. And then you might, since you're moving numbers around, you might want to redo the math just to check. So we'll do it real quick. And it should come out to 126,205. We got a fantastic. Any questions on that? This is one that